Hello friends, today I'll discuss on listing of securities and financial products on the recognized stock exchanges in the IFSC in India. Let us start the presentation. Now, I base my discussion on the recent regulations issued by IFSCA on listing of securities in September 2024. Now, what can be listed on recognized stock exchange in IFSCI? First is equity shares and specified securities. Second is depository receipts. Third is special purpose acquisition company. Fourth is debt securities. And lastly, other permitted financial products. I will discuss in this particular webinar only on equity shares and specified securities, depository receipts, and special purpose acquisition company. Now, the regulation covers the 8 issues or the 8 products, financial products that can be listed on the recognized stock exchanges in the IFSC. But let me explain these 8 in a proper way. We have specified securities. Specified securities means equities, debt instruments, and depository receipts, and such other financial products as may be specified. Now, next we have special purpose acquisition company. I will explain that in details. Next is issue and listing of debt securities by an entity. Depository receipts. In specified securities, we have IPO by unlisted entity. An unlisted entity may be the Indian company or it may be a foreign company. It can launch an IPO in the IFSC. Next is FPO by an already listed entity. An already listed entity may come and listed entity may give an FPO to the other shareholders. Next is issue of rights issue, preferential issue, or QIP. Now, in issue and listing of debt securities, we have debentures, bonds, and short-term products like commercial papers, certificate of deposits, other permitted financial products. These can be listed on the stock exchange in IFSC. General eligibility criteria. The issuer is incorporated or set up either in an IFSC or in India or in foreign jurisdiction. So the issuer is incorporated or set up either in IFSC or in India or in foreign jurisdiction in accordance with the relevant laws of its home jurisdiction. So a company or entity that is incorporated in Germany in accordance with the relevant law of its home jurisdiction, that is Germany, can issue securities and financial products in the IFSC. Similarly, a company that is or entity that is incorporated in India can issue securities or financial products in the IFSC. Similarly, the IFSC, those who are already incorporated or set up in IFSC, can again issue securities or financial products. Now, next point. The issuer operates in conformity with its constitution. The constitution of the company or the entity or the issuer must be such that they operate within the limitations of its constitution. Next, the issuer is eligible to issue such securities or other financial products that are proposed to be listed on the recognized stock exchange in conformity with the relevant law of its home country. So suppose suppose the issuer is from UK, then he must issue such securities or which are proposed to be listed or issued on the stock exchange in IFSC. He must act in conformity with the relevant laws of his home jurisdiction, that is the UK laws. Indian company must conform with the FEMA non-debt instrument rules 2019 and companies listing of equity shares in permissible jurisdictions rules 2024. So we have seen the eligibility criteria. Now we will see when the issuer is not eligible to list its securities in the stock recognized stock exchange of the IFSC. An issuer shall not be eligible to list its securities if the issuer or any of its promoters, controlling shareholders or directors or existing shareholders offering shares in the issue is debarred from accessing the capital market, or a willful defaulter, or a fugitive economic offender. So far as willful defaulter and fugitive economic offender is concerned, it will be considered as per the relevant laws of its home jurisdiction. Suppose the issuer is in UK, then he will be ruled as per, he will be decided on whether he is willful defaulter or fugitive economic offender based on the laws, that relevant laws that are there with respect to willful defaulter and fugitive economic offenders in the UK. Dematerialization form. The securities and other permitted financial products listed or proposed to be listed on recognized stock exchange shall be freely transferable and held in dematerialized form only. Currency. The securities and other permitted financial products shall be denominated in specified currencies. There are 15 currencies that are presently available, and the security and financial products must be denominated in those currencies only, not in Indian rupees. Denominated in specified foreign currency for listing or trading, even listing and trading on a recognized stock exchange. So the listing will be in foreign currency and the trading also will be in that currency only. So as per the IFSC banking regulations, first schedule mentions only 15 currencies that are available at the moment. So person or the entity from within the Indian jurisdiction who wants to issue securities or permitted financial products in IFSC may be permitted, but the currency will be denominated in those 15 foreign currencies only for listing and trading purpose also. Eligibility criteria for IPO. There are three either conditions. The issuer has an operating revenue based on the consolidated audited accounts of at least $20 million in the last financial year or average over the last 3 financial years. Financial year means the financial year in the home jurisdiction. Suppose the issuer is from USA, then the financial year starts from 1st of January and ends on 31st December. Then the financial year is that year. So far as Indians are concerned, Indian issuer are concerned, it starts from 1st of April and ends on 31st of March next year. So if this condition is not satisfied by the issuer, then the issuer the second point is the issuer has a pre-tax profit based on consolidated audited accounts of at least $1 million in the last financial year or average over the last 3 financial years. So operating revenue 20 million plus at least plus, or pre-tax profit of at least or more than $1 million. If both conditions, either of the first 2 conditions are not satisfied, then we go to the third condition. The issuer has a post-issue market capitalization of at least $25 million. So post-issue market capitalization. The authority, that is IFSCA, may consider other issuer to qualify under next point. Operating guidelines. Now, the issuer shall appoint a lead manager to to the issue and other intermediaries in consultation with the lead manager. So the first condition is that the issuer shall appoint a lead manager. Now this lead manager will appoint other intermediaries in the IFSC in consultation with the lead manager. So other intermediaries are like registrar to an issue, share transfer agent, depository participants and all, custodians. Next, the issuer shall file an application with the recognized stock exchange seeking in principle approval for listing of the specified securities. So the issuer is responsible for filing of the application, filing of offer document. The issuer along will file the offer document with the authority, that is IFSCA. Offer timing. The offer shall be made by the issuer within a period of not more than 12 months from the date of issuance of observation by the authority. Lastly, the initial public offer shall be kept open for at least 1 working day and not more than 10 working days. This is so far as the IPO is concerned. For FPO, we will discuss in detail later on. In case an offer for sale, the specified securities must have been held by the existing holders for a period of at least 1 year prior to the date of prior to the date of filing of the draft offer document. So normally what happens, startup, stand-up, these guys are interested in raising funds for their operational part. So they can make an offer for sale at IFSC. But the condition is that they must hold those existing securities or specified securities for a period of at least 1 year prior to the date of filing of the draft offer document. Now I will explain the special purpose acquisition company. SPAC is a non-operational or non-operating company. It does not conduct any business. It just collects money and it invests that money for the purpose of merger, amalgamation, acquisition of assets and acquisition of shares. So these are the main objective of forming a special purpose acquisition company. They can do global acquisitions, they can do acquisitions within India, outside India, based on the motive or purpose of the SPAC. Depository receipts. Depository receipts, shares are issued by the Indian company and they want to raise funds in foreign currency for purpose of their business activities. So best example is Infosys ADRs. These depository receipts were issued by the company in India. They bundle up those shares, form a depository receipts, get the approval of the Securities Commission in USA, and they list those depository receipts on the stock exchanges in USA. Now, the payment, similarly, a company which is incorporated within India or outside India can issue depository receipts to the issuer. Sorry, the issuer can raise money by issuing depository receipts to the investor. Shares in Indian company or foreign company, shares are converted into foreign currency and they are bundled up as a depository receipt. Now these depository receipts are listed on the recognized stock exchanges within the IFSC. So with this we end part 1, where I will discuss other parts as well. On the listing part, the various financial intermediaries that are there, how one can list as a financial intermediary in the IFSC. So I am conducting free webinars every Sunday at 10 a.m. to discuss on various intermediaries and scope of their work and how a registration can be done in the IFSC. Hope this video was useful. Thank you.